Welcome to the Hurley Investments Market View Commentary, the last one for 2023, the 18th of December. Couple things to go over with you. I will be back again basically in 2 weeks. I think we do the 8th of January. Maybe it's 3 weeks. But off we go. So, as a heads up, Hurley Investments will be back with you guys on January 8th. So January 8th of 2024, HI commentary starts up again. With that said, it's kind of interesting. Both Christmas and New Year's fall on a Sunday, which means the following Monday, markets are closed. So where is my planner? So looking at my planner, Christmas Day is the 25th. So it'll be 12/25/2023 and 01/01/2024. Markets are closed. With that said and that understanding, tomorrow is really the last day of any volume trading. So there's a couple things to say. That equals retail traders run the show, which means the Christmas rally by definition, right? Which the Christmas rally that I would see by definition is like the 26th through January 5th. So I'm going to say December 26th through January 5th is completely up to retail traders. And you got to keep in mind, tax harvesting is real. So the first down day should / historically be a doozy. You'll see everyone trying to jump in, and you'll see everyone trying to sell at the highest price possible. Maud made the comment, I think retail will just buy, right? You don't know. There's usually not enough volume that you can think in some type of historical way. You just don't know. There's not a historical way that you can think, because you just don't know. I would think they'd be following the trend. And for most of the people that I've spoken to, there are down years across the board, but this one is a down year due to the 40% of bonds that just went illiquid because of last year's trading, last year's rate hikes. So I don't know. I mean, that's a great question. I don't have a great answer for where I feel things are going to go. Let me get back to you on that one, right? But we have had 1% 4 quarter-point rate hikes this year. Last year we did 50 basis points and 4 75s and 25 and a 50. So yeah, I mean, we went up out the window last year. But yes, the bonds were affected last year and this year as people have been a little gun shy and volumes on bonds have been low. So tax harvesting. Let me just make a single comment. If someone says to you, paying more taxes is the cost for making money, say in the stock market, has never really made any money in the stock market. So just as a heads up, if someone tells you, well, you're gonna have to pay higher taxes, that's just kind of the cost. They've never been to where they're thrown into the highest tax bracket. And I'm going to politely say that they've never made any real money, not saying it wasn't real money to them, but money that affects taxes to any degree. Because if you have, of course, you've got a tax harvest. And part of that tax harvesting, if you are selling for a profit, well, Kevin, that's not exactly tax harvesting. It could be if you have your protection on. You want to get your taxes. In all honesty, I try to push taxes somewhere into that, you know, $5,000 to $15,000 range. But if you're selling for a profit, you can buy right back in. If you are selling for a loss, then you have to wait and buy back in 31 days later. Or you don't get the tax loss. And that goes for options too. If you say, hey, I'm going to sell out, add some leap long calls to take the place, you don't get the tax harvesting. You don't get the loss. It doesn't mean you don't get it ever. You just have to keep track of it. And when you do sell, you have to tell your accountant, and you got to, you know, have a copy of what's been done. And that's the way that those things work. But that's where things are going to get a little dicey for tax harvesting and so forth. For us, and it's pretty easy to say, some of you will have two, man, I just can't spell ever, 1099 miscellaneous from Schwab and Money Block. Just some things to keep into memory. All right, going over next year's expectations, and I'm going to say this in a very candid way. Please don't get mad at me one way or the other, but I'm going to say it. I don't want to call them forecasts, right? But I know there are some things that will affect the market. And number one is elections. And I'm going to just say there are consequences with either party. All right. And where I'm going to go with this one, and I'm going to say it as clearly as I can, and please don't get frustrated with me. I usually don't do political whatevers, but let's just make a couple comments that I'm going to believe in and I think are important. My belief, I'm going to tell you, Joe Biden is mentally, and I think Joe Biden is mentally and physically impaired, which means because of that, who might take his place? And I'll be honest with you, I don't know. I don't follow the Democratic Party very well. I do know that Gavin Newsom has been in there as a front runner, but I know he's done a horrible job in California because that's where I came from, and I've seen what he's done there, and I still have in-laws and friends and family there. And I don't know who else would run. I know there are Gretchen Whitmer and Jennifer something or other that are the women that might be an honest, interesting approach. But I don't know enough of what the Democratic platform will be to say, well, I would say if Joe comes back, I think we're in trouble, even worse trouble than we've been in the last 3 or 4 years. And if it's someone else, I don't know what the platform will be that might shift more towards the middle and mainstream America. For the Republicans, Trump has it right now on both polls, meaning Republican, and as a president. He's got everyone beat. He's got everyone beat by way of his own party and right now in the overall election. That doesn't mean, and this is interesting, I'm going to say that doesn't mean he might be in jail. And to be honest with you, I read an interesting article. You can be in jail and win the presidency of the United States. And I don't know if you're allowed to pardon yourself, but no one on the Republican side seems to be anywhere close to beating him. I don't think anyone on the independent side is close to beating him. And I don't know. What I do know is election years are usually, on average, up 8.5% stock market and 7.4% bond market. So we're going to see. Wars. Scary, right? At least in my mind, this is probably one of the biggest concerns that I have out there. And I would go so far as to say Ukraine versus Russia, to me, seems to be leaning towards Russia winning. I'm going to say Israel versus Gaza seems to be leaning towards a Middle Eastern war. And where I'm saying with that is I'm taking a look at things that are happening. This will most likely be in Israel, US, Saudi Arabia versus Gaza. And I'm just going to throw out where I see the biggest issues coming up. Lebanon, Palestine, Iran, Syria, Yemen, and I thought I had one more. God, Lebanon, Palestine. Yeah, Afghanistan. And those would be the sides as you take a look at it. And that would be my biggest concern moving forward on where this all might go to. So obviously, if I'm looking at this volatile oil, and I'm just going to say other commodity pricing. It's going to swing. It's going to swing a lot left to right, and it's a little scary. Okay, recession with a soft landing. Now, understand, we can still have a soft landing and run into a recession, and a recession that let's just say that significantly, how's that for spelling? Significantly lowers the stock market. Now, with that said, a bear market, recessionary market is obviously a less than or equal to 20%. But mathematically, 31% is the target number, and some people are calling for a 50% loss in the stock market. All right, can anyone tell me, how do we lose 50% in our stock market? Because I do want to kind of put an end to it right now. Can anyone tell me, how would we lose 50% in our stock market? Massive selling. Well, of course. But what's the catalyst? What are the catalysts that would create a 50% loss? War. Well, we just talked about war. But to be honest with you, I'm not sure the war would be there. But I will say a nuclear threat could be a reason that we would lose 50% in our stock market. Hard landing, any scenarios you mentioned, bigger war, agreed, Mod. Rising interest for some unpredictable reason, bingo. Rise in inflation leading to no cuts or even a rate hike. Wow. So Abraham, in all honesty, I thought I was going to come up with that one. That is a huge one to understand. Currency readjustments. So I'm going to change that, Jim, because you're on the right track, but I want to change currency readjustments. Let me just call it what it is, because something causes currency readjustments. I'm just going to call it a global recession. And when you think, well, I don't know, Kevin, understand China is most likely going to be flat next year. We don't know what their stock market boost number 3 is going to be, but it'll most likely be flat. Most countries in the Middle East are in a recession. Most European countries are in a recession. It's not fair to say most South America countries because that's not true, but we don't know what to read there. So a global recession would be it would be the cause for currency readjustments, right? A new Ultra COVID 2.0, yeah, but I don't know if that's on the horizon. Obviously, that could be there, but I would give very little credit to that. I kind of believe most of the stock markets still follow the United States. So I'm just going to call it a lending / banking crisis for the huge amount of loans / restructuring of debt coming up in 2024. With that said, thought processes are 20-so regional banks between $200 and $1 billion. I can't remember the number, but I want to say there's something like $4.5 trillion of debt restructuring, of pushing it down the road, that will most likely save banks, but won't save the United States. Meaning if we push this debt down the road at these higher interest rates, it's cash strapping these banks for decades. So if you want to buy a house, and even if you're thinking of some lower interest rates next year, don't get too greedy. You can't afford to get too greedy. You just need to take what you can get because it doesn't look great in the near future. Two of you made the same comment. This is an age where printing money is the norm, so certain types of past style of crisis will not happen in the foreseeable future. The other one said, this is in the land of kicking cans down the road, so a depression is most likely in the future. And you're both right. But the certain type of past style of crisis, Abraham, will most likely be significantly quicker in coming. So we're probably not there for a Great Depression, but we're probably there where the restructuring of debt and dollars, and we're already there. There's no getting out of it. So it'll be interesting to see how countries work together for restructuring their debt. And the problem is, again, for the U.S., it's when does the reserve currency go to a basket of currencies? And that would be a risk if Donald Trump gets in. Nobody likes the guy, at least here. And overseas, I guess we were kind of made a joke of, but his policies were pretty good. In fact, his policies were amazing. I wish more people would run the United States like a business. Yes, that means if you hired people in the cabinet positions and fire them 3 weeks later because they're not the right person, you do it. But that would be a bigger risk if Trump got into office. How quickly people are going to say, you know what, screw the U.S., let's go to a basket of currencies. There's no reason they need this political advantage and this monetary advantage over all these other countries. It's just not needed. It just does not make sense. So those are the issues in front of us. Next week's expectations, I was more apt to tell you that we'll keep running until I prepared for everything tonight. So let me just run to the briefing, what it all means. The year ahead will be another battle of interest rate expectations. The market is gliding into new year, however, with a confident sense that it'll have its Christmas cake and eat it too, with the series of rate cuts in 2024 that are more passive than active in nature. What we mean by passive is rate cuts that happen with inflation gliding back to a target in an easy economic manner, as opposed to active rate cuts that happen because an economy is floundering under the weight of prior rate hikes and or a Fed that stayed restrictive too long. It's listening to Fed Chair Powell, and he seems to be entertaining the passive glide path, which is why the showtime this past week for him in the market. The Fed doesn't get it right, ever. And it's not their fault because you can't predict the future. So before I went through all the doom and gloom, I would have told you next week's expectations, pretty simple. We're still moving higher with 1 or 2 big down days. And that's just saying, hey, we've got to do some tax harvesting. Some people will sell. So there you go. The good news is tax harvesting will be most likely felt on the big 7. That's where profits are. Take some profits to offset some losses. Take some losses to offset some profits. That's where you're going to see it. All right, here we go. Earnings on Wednesday for Micron. World markets end this week higher because of retail sales. We're overbought on the Dow. They don't stay overbought for this long. It'll be a drastic drop down. Same thing with the S&P. They don't stay overbought this long, but they can with retail traders. Same thing with the NASDAQ. Our biggest concern is how quickly do we get protection on moving into earnings next quarter. December is still calling it up 2.5%. I might even change that to be a little bit higher now. I would go 3.0. Earnings, FedEx on Tuesday, Micron on Wednesday, Nike on Thursday. Those are the ones that matter. Economic reports, not really important. Building permits and housing starts tomorrow. Tomorrow will be the last day of any volume. Existing home sales won't matter on Wednesday. Leading indicators, GDP, are all expected to be good because of the prep for people buying, and inventory overhauls where they're pushing inventory to consumers should be good. Same thing with durable goods. So none of these are going to matter except for how retail traders view them. PCE prices might be important for the retail public, but no one's really trading on Friday. We look pretty easy going into the end of the year, if not having a pretty flat week from here on out. I have an article. Here's why bring inflation has been different this time, according to Jerome Powell. Interesting article on Alibaba, JD.com, Baidu, in China. Under Armour. I've got a pretty interesting article on Under Armour. And some people have said, Kevin, I can't believe Under Armour is moving so high. So let me go ahead and let me pull an Under Armour here really quickly. Pretty neat to see Under Armour at $9. But the comment was, will it get back up to 13, right? How far is it going to go? What I normally will do first off is I will take the forward PE of 15.02 that I think is too low. I usually will take earnings from this year. If you multiply those two across the board, if you multiply those, and this is what I'm going to be doing over Christmas break, 15.02 times 0.9, you come out to a number of $13.51.8. We'll just round it up to 52 cents. So that is a realistic number. Well, Kevin's next year's earnings are saying is 0.6. Rarely does it go down. So yes, it says that, but rarely is that a common or expected occasion. And again, if you're going to take a look, well, I think their PE is too low. I really want to give their PE a 20. I'll show you why in a second. If I give the 20 times the 0.9, that comes up with a number of $18. So somewhere between $13.50 and $18. Kevin, how could you give them a PE of 20? Well, still doing everything right. But Nike, who is their nearest competitor, Nike has a PE of a 37, a forward PE of a 27, which means their PE somewhere in the middle, probably closer to 32. That's why I want to give them a higher one. Lululemon, who is their other competitor for the woman, that's ridiculous. That PE is 63 to a 35 for a forward PE. For that reason, I really think Under Armour can go significantly higher. If we're looking in the near future, it's 13.5. If we're looking a year out in time, it's going to be possibly 18, but it'll be a jagged, non-recessionary type of run higher. So that's how I'm coming up with things and why I'm so proud, especially for my little guys, that Under Armour's moving. And Kevin, why was Apple down today? Well, Apple is making a pause on some of their watches because they're in a contract intellectual property dispute with Massimo over the blood oxygen feature. So that's why Apple was down today. They're going to stop running those. Yes, we'll probably have protection back on Apple at 95 very quickly, but it weathered a pretty awful storm, and we chose to give it one more day to see how retail traders are going to trade Apple into tomorrow. So with that said, last chance. What questions do you guys have for the next 2 to 3 weeks that I can answer for you? Dave and David, nice to have you here. Maud and Mary, always great to have you guys. Bosserman, Kohler, Abraham, Russ. Who else is that? Lance. Always good to have you guys. I appreciate you guys showing up. Any other questions you guys have that I can answer for you? If not, guys, have a Merry Christmas and a Happy New Year's. It's been my pleasure to be here with you on Monday evenings throughout the year. I would wish that you guys can enjoy your Christmas and enjoy families coming up. Go ahead and don't look at any of this till next year. And if there's any questions or concerns you guys do have, please reach out to me. Things will be pretty easy going into this next 2 weeks. I'll have plenty of time other than working my numbers for you guys on the 8th on where stocks are going to go into the future. And with that said, hey guys, I appreciate you guys. Have a wonderful, wonderful Christmas. And we look forward to seeing you guys bright and early, January 8th of next year. Off we are to our next year to see where we can grow this money that we have. You guys take care. Have a wonderful evening, and I'll see you next year. Bye-bye.